going to be talking today about the role of the financial sector in green investment and in climate-smart investment. And we've got a fantastic panel lined up for you. I'm going to start inviting them onto the stage now. First of all, we'll take Hans-Peter Lankes, who's Vice President of Economics and Private Sector Development at the IFC. Welcome. Then if I could invite, if you come here, no. If I could invite Cory, who's Managing Director and Global Head of Insurance-Linked Securities, Origination and Structuring. That's at GC Securities. Welcome. Thank you very much for joining us. Then we've got Merli Baroudi, who's Director of Economics and Sustainability at MIGA. You come up on stage, thank you. And finally, no, sorry, not finally, we've got two more. It's Marie-Laure Bourat, who's Director of Impact-Based Finance at Société Générale. Thank you. And really, finally, we've got Matthias Hellstern, who's the Managing Director of the Corporate Finance Group at Moody's, the rating agency. So thank you all for... Thank you very much, all of you, for joining us today. Now, what we're going to be talking about is how green investment is not just necessary, is not just vital for reducing greenhouse gas emissions, bringing us to a low-carbon future, but also yields very respectable financial returns in and of itself as an investment class. We'll be looking at issues such as how do we define green investment, where does green investment come from, what are the rules and regulations surrounding green investment, and where are we now in terms of green investment, and where should we be? We'll be looking at the means to get to where we need to be. We're all aware of the Paris Agreement. I well remember standing in the hall as people were whooping and cheering around me as the gavel came down in Paris. But the whooping and cheering is only the beginning. In order to actually meet the Paris goals, we're going to need billions of investment. And although we are getting there, investment is growing, and we're seeing some wonderful initiatives coming forward from the public and the private sector, from development banks, from organizations around the world. We still have a lot further to go. I don't think anyone would dispute that. So, to kick off then, I'm going to ask our panelists to give me a few of the key points that they'd like to make about how we do climate-smart investment and where they see themselves as having a role in that, their organizations as having a role in that. So, Hans-Peter, you're responsible for the IFC's strategies and projects, ensuring that they have a consistent focus on results. And you've got this particular focus on green investments. You're playing a fantastic role, I think people would agree so far, but perhaps there is more to do, I think we could agree. Can you tell us, please, what is the role of an institution like IFC and in this particular market, and how does the IFC help to green the financial sector?
Good. Thank you very much, Fiona. So, I work for the International Finance Corporation, that is the private sector-oriented part of the World Bank Group. And as some other speakers yesterday have already mentioned, we're taking increasingly an approach that works across the public and the private sectors because we feel that the solutions are there at the interface, creating opportunities for investment. Now, as we know, the challenge here is enormous. We need to find solutions in the billions and trillions. We know that the public sector alone cannot meet these objectives. We have to bring in the private sector. A key role of an institution like the IFC in the coming years is going to be to enable the private sector to invest at a larger scale into climate mitigating and adapting investments. And in order to do that, IFC itself works in the emerging markets to help prepare projects, to help projects to be bankable, to meet objectives, climate objectives, be it in the agriculture sector, be it in the green buildings sector, be it through the financial sector. So we work in a very hands-on way with institutions and sponsors in emerging markets to make investments investable. And then we try to find partners to invest with us. And that is where the trick comes, because even with our fairly ambitious targets, and we want to raise our climate investments from about $5 billion in new investments last year to something between 15 and 20 billion by 2030. Even though those may be impressive numbers, they are very small compared with the challenge. So we have to leverage in, we have to mobilize the private sector into these investments. And the role that the IFC can play, apart from presenting, helping to prepare bankable projects in the project pipeline, is to provide forms of risk mitigation. For instance, in the context, in how do we bring institutional investors into these situations? IFC has designed a platform, the MCPP, Managed Co-Lending Portfolio Platform, in which institutional investors can take a stake in a diversified portfolio of investments, and IFC provides a first loss tranche together with the Swedish Development Agency. So that is one scheme we have. Or through green bonds, in which IFC emits bonds, issues bonds directly that are linked to green investments. It also works with its partners, with banks in emerging markets, developing countries, to enable them to issue green bonds, and then invests in these issues. And now, as a third step, has created, together with Amundi, a platform which brings both the demand and the supply side together and enables institutional investors, again, to invest in bonds issued by emerging market banks, green bonds issued by emerging market banks. So these are some of the approaches that we use, and the role of IFC tends to be the one of helping to structure these transactions, but then also taking risks that others are not willing to take in order to mobilize other sources of finance.
Thank you very much. That's very useful, and we will actually get into some more detail on some of the financial instruments, green bonds you've mentioned, and the de-risking that the public sector can do for the private sector in a bit more detail later. Thank you for that. Cory, as we mentioned, you're an expert on insurance-linked securities, and you've worked in insurance for some time. Can you tell us a little bit more about the role of GC Securities in green investments and the challenges in bringing forward insurance products for this market?
Sure. So a little background on the company I work for. I am part of GC Securities, which is Marsh & McLennan's broker-dealer. I service all of our sister companies within Marsh & McLennan, which consist of Marsh, Guy Carpenter. Marsh does risk intermediation for corporates. Guy Carpenter does it for insurers and reinsurers. I also work with Oliver Wyman and Mercer. My role over the last 20 years really is kind of in the title of this conference, which is Innovate. I have been at the forefront of revolutionizing how the insurance and the reinsurance space assumes risk, how they warehouse the risk, how they finance the risk, and by directly introducing capital markets investors on the fixed income side, who historically had not been supporting insurers and reinsurers. It had been predominantly through the equity markets, but bringing fixed income capital with a different cost of capital and different risk metrics and parameters that they're willing to assume en masse into directly assume catastrophe or climate-related risks, predominantly focused on natural disasters or things that are outside of necessarily man-made control. But then we've been increasingly expanding the footprint of the type of risks that these investors will participate in. So there is no kind of technology app that suddenly revolutionizes the industry. It's a slow-moving process because of regulatory constituents, rating agency constituents, et cetera. But it's been fairly interesting over my career, the number of first-of-its-kind type deals that have been done and that I continue to work on. And I look forward to more of those type of deals coming out this year.
Thank you very much. And insurance obviously is one of the key players in looking at climate change. Would you say that insurers have been ahead of the market in this?
I think it depends on who you're talking to and how you're talking about them. By having capital markets capacity come in, we have, and lowering the cost of hedging climate-related risks, what we are starting to see is people willing to now not retain such risk, whether it's a sovereign, a corporate, an insurer, or reinsurer, but maybe there's a better way that I can enter into a partnership with capital markets investors to have them assume that risk and finance that risk as opposed to me holding it. And when you look at the size of the capital markets and spreading that risk out, the way that I talk about this space is as opposed to having a concentrated size of capital, you know, if I have a small bowl with water in it, and that represents my capital, and I drop a rock into it, you're going to see a huge reaction, a huge splash comes out. But if I have a much larger bowl of water and I drop the same rock into it, it has a trickle effect out. And all of that should be very helpful for any constituent that is either, whether you're a sovereign and trying to manage your budgetary impact as a result of a climate change related event, whether you're an insurer or reinsurer that's dealing with capitalization, recapitalization post-event, to the extent that we can mitigate the capital depletion swings because it's impacting and it's not so concentrated, I think benefits every constituent in the market today.
Thank you very much. Thanks for that. And we'll hear more on that shortly. Merli, if I could come to you next. You are responsible for MIGA's economics, country risk management, evaluations, and environment and social development functions. Can you tell us a bit more about how MIGA is operating in this market, for instance, in helping to de-risk private investments and to incentivize private investments? Thank you.
Thank you very much. Well, first of all, let me speak a little bit about what MIGA is. So MIGA is the third arm of the World Bank Group. Of course, we have the World Bank, which is oriented towards the public sector, IFC, which is oriented towards the private sector, and then MIGA, which is a provider of political risk insurance and credit enhancements. So in this role, of course, we are dedicated to looking at how we can reduce global poverty and enhance shared prosperity, the twin goals of the World Bank Group. And to drill down on that, we have three strategic roles. One is to help the poorest countries, another is to help the countries that are affected by fragility and conflict, and the third is to scale up significantly in climate finance. So in the past few years, MIGA has done a lot to try and do more in climate finance and to try and mobilize private sector investors to invest in climate-friendly investments. So, for instance, we are doing more in space reflected in the renewable sector, which is really the driver of our current business in in climate finance. We are also now doing more to enhance private investors' interest in financing green buildings and energy efficiency. And finally, also, we are trying to scale up more in adaptation and mitigation. For instance, in smart agriculture, where we are supporting some projects in South Asia and Sub-Saharan Africa. So our reach is really global across developing countries, and we are now active in climate finance transactions across all of the continents in which the World Bank Group is operating. So MIGA, as a political risk insurer, has a particularly important role to play in climate finance because, of course, especially, for instance, in the renewables sector, the renewables are a fairly new investment for private sector investors. So we see that there's particularly a lot of government involvement in many of the renewables sector in terms of, for instance, feed-in tariffs. So these are new frameworks. They're potentially frameworks where governments are trying to attract long-term capital. Clearly, the renewable sector is in a state of continuing change. So the questions about what pricing is important now is something that may change down the road. And also, these frameworks are coming on board very, very quickly. So investors who may have concerns about investing in emerging markets in general come to the renewables sector with particularly potentially elevated ideas about risks in emerging markets in perhaps the solar and wind projects. So what MIGA can offer is coverage against some of the risks that investors may find themselves facing. In particular, our breach of contract coverage can be very effective in getting clients, private sector clients, to invest in solar and wind projects because we can de-risk those projects through providing breach of contract coverage. We also offer war and civil disturbance coverage, expropriation and creeping expropriation coverage, as well as risks around convertibility and transfer. So these can give investors the extra comfort they need to come into the renewable sector, which is a fast-paced changing sector. So MIGA is playing an important role there, but we're also using our instruments to innovate around the climate finance space because, as you indicated, there's so much to do, there's so much to scale up, and MIGA wants to be there to help private investors play an important role. As we know, the private sector has to be there, and MIGA's instruments can really facilitate that. And we are looking at many different ways to innovate further with our products, and I can talk more about that as we go on.
Yes, thank you very much. Yeah, and a great deal of work is being done. I mean, would you say that this has expanded, still expanding? Is there a great deal more that you will be able to do in the next few years, do you think?
Well, yes, I think the World Bank Group in general is looking to expand in climate finance. We have specific goals that we're trying to meet by 2020, but beyond that, we are looking to be leaders in climate finance and are leaders in climate finance in terms of both helping private sector and using the various tools that we have in terms of blended finance to bring private sector financiers into the climate space. So there's no doubt that right now MIGA's portfolio is about 25% in climate finance, and we're looking to scale that up significantly, even as we grow the portfolio in other sectors as well.
Yeah. Brilliant. Thank you very much. Thanks for that. I'm going to turn now to Marie-Laure, who, as I said before, is the Director of Impact-Based Finance at Société Générale. She's also worked on project finance in various roles. And I'd like to ask you, when we talk about impact-based finance, impact-based investment, can you just tell us a bit more about what that means, impact-based? Because isn't everything impact-based?
Well, I certainly would hope that it is, but we think it's probably not all the time, and we'd like to see more impact being considered as maybe the main driver for the investment, because if there is impact, there is better hope that there will be sustainability on the one side, but also very important for the private sector, and I could see it on one of the questions appearing on our screen right in front of us, some good business in return on investment. I'm here to be private sector, so I have to say that. In a social space, it's not always very admitted, but in the climate space, it is well accepted that the private sector has to get a return on investment and not only break even. So impact-based at Société Générale derives from the Positive Impact Initiative, which is under the umbrella of the UNEP-FI. SG has been a founding member of this initiative, and basically we're working like everybody here almost, towards reaching or bridging the financing gap towards the SDGs. We use impact as the core value or the core aspect of what we want to get to. For instance, do you want public lighting, or do you want more than public lighting? If I ask the question differently, do you want a school, even if it's not really climate related, or do you want education? Do you want health, or do you want a hospital? And we believe that if we manage to better express the tenders, focus them on the impacts, we might reduce the cost to impact, we might improve, or we will improve the benefit of the investment to the community and also to the private sector investors, but also to the multilateral agencies and public agencies that are working towards the financing of climate and other infrastructure.
Thank you. And can I ask, do you sometimes have a hard job persuading your colleagues that green investment is good for business as well as for the planet?
Well, at Société Générale, it is not so much complicated. We've come a long way. We have sectorial policies now for a number of years, and we've always been involved in trying to find innovative solutions for emerging market finance, for trying to do commodities financing, which is a very important franchise for us, in a sustainable way. So yes, we're getting there. From the client perspective, we see a number of clients being challenged in their traditional business models, and it's very true in the energy and utilities business. It's not just about delivering electricity anymore, it's also about delivering efficiency. That's what the customers want. It's also about getting to renewables, and we are trying to accompany them in their changing business environments and business models. If they change their risk profile, they will change the way we're going to finance them.
Thank you. Thank you. That's great to know. And Matthias, I'll come to you next, because you work for Moody's, obviously, where you're corporate managing director of the corporate finance group, and you've been with Moody's for a long time, since October 2004, which coincidentally is when I started writing about climate change. So we must both be onto something. Can I ask, the ratings agencies are obviously play an absolutely key role in investment, because the ratings that you give to things like green bonds or any sort of bonds and financial instruments obviously determine a great deal of the investment flows that go into these products. Can you tell me, are you taking environmental risks into account when you're looking at ratings? And can you also just elaborate on what role rating agencies like Moody's can play in helping us to develop a green economy?
Yeah, thank you very much. So first of all, probably a quick introduction. I'm managing a team of analysts, and we are covering companies in the car manufacturer sector, but also in the capital goods sector and the building materials sectors. And it's our role to assess the ability of companies that are issuing debt, whether they can actually service the debt once it becomes due. Now, you could ask the question, but what is the reason why I'm sitting here? And the reason is because many of those companies are increasingly exposed to risks coming from climate change and from climate risks. They're also increasingly exposed to regulation that is being implemented by politicians that they need to adhere to, thinking of the car manufacturers that need to adhere to a certain CO2 emission level in the next 2 years. And if they do not hit that emission level, they will have to pay huge penalties. And this is something that is for sure impacting the ability of them to service their debt over the longer term. And this is why it is increasingly important for us to assess and identify the risks of individual companies that are issuing debt with regard to risks on climate change. And in order to achieve that, we are actually increasingly using also an increasing workforce to look into this and to find out what we actually also need in order to assess those risks in the right way. We also actually have to look into not only risks but also opportunities. There are many companies out there that have products that we need urgently in order to move to a low carbon economy. We have done a study of all sectors that we are covering in the last 2 years and have identified around 18 sectors globally that we believe are significantly exposed to climate risks. And these companies have outstanding debt of $3 trillion, roughly. In order to also help companies to get into a low carbon economy, we have introduced an assessment that is called Green Bond Assessment. That's nothing to do with the ability of a company to service its debt. That's more to do with helping investors to find out whether a green bond and the proceeds from a green bond are used properly for so-called green projects, and whether there is governance in place that helps also investors to see whether those proceeds have been invested properly. We are also participating in the task force of the Financial Stability Board on financial disclosures because we believe that it is very important to have a formal rule and guideline for companies to report their exposure to climate risks in order for us and for many other investors to assess those risks in a proper way.
Okay. Thank you very much, and thank you for that explanation. That's very helpful. I'm going to, you can see that we've got some great comments and questions coming in, so I'm going to start putting those to our panel in a moment. First of all, I think Buzzmaster has some questions for the audience awaiting us, so perhaps we could start with one of those.
Yeah, we have a number of them. I think we'll deal with one or two. Let's see what happens. So if you refresh your screen and your mind, and here we go. Here's the first question is, who would be mainly responsible for investing in the green economy? Should that be national level governments, international development banks and institutions, private sector financial institutions, or all of the above are needed? I'll read out the answers again. Perhaps they're not legible on your phone, especially the second one is national level governments, international development banks and institutions, private sector financial institutions, or all of the above. It's kind of mean to put in all of the above, right? Because
I think that what we're saying here is that our audience are very much in favor of a mixed finance, where we get finance from national governments, international institutions and the private sector. So that seems to me broadly in line with what our panel thinks also. Shall we take another Buzzmaster
we'll
question
move on.
And then we'll...
And that is, who are the leaders, not who should be, in the climate/green investments? Are those insurance companies, pension funds, banks, or national governments? What is the correct? Is there a correct answer? Sure. But I think it's insurance companies. But I might be wrong. Oh, look, you see how that works? I think it's banks. There you go. All right, well, these are the answers. I won't be misleading anybody anymore.
There we go. We're seeing a mixture there, but national governments very definitely seen as playing a key role there. So I'd ask our panelists in a moment whether they think national governments are doing enough. And shall we have a third Buzzmaster question? And then
do it. We're on fire. What financial instruments / methods do you see as playing the biggest role in green investments? What financial instruments or methods do you see as playing the biggest role in green investments? Are those green or climate bonds, carbon trading and pricing, insurance products, for example, catastrophe insurance, or public / private partnerships? I want a jingle. Well, I'm not getting one.
There you go. Well, we're seeing quite strong support there for carbon trading and carbon pricing. And obviously, at this conference, we've had a World Bank report on carbon trading and carbon pricing, which has shown some positive signals there. I'm a little bit surprised that insurance products are not showing a great deal of support there. Would you like to respond to that, Cory?
Sure, it just may be the lack of familiarity with what they're doing. I do think there's a tremendous amount going on. Micro insurance is a great example of that on a very base level, but in aggregation overall. I think one of the hardest things it is in asking risk takers, because it's a little bit different when you're asking someone to invest in a bond that you expect to get repaid, and you're making an investment into either a social good project or a green bond. There's at least a revenue base or somebody that can backstop it that you expect to get some recovery. The difference when you go into insurance product or into a financial investment that's linked to the performance of the insurance risk is that when bad things happen, you don't have any recovery. It's how much do you lose. And the biggest thing for those constituents is, how do I assess the risk? And so a tremendous amount of data mining and modeling is needed in order to really have meaningful capital come in, because if I don't know if that risk is, it'll happen 1 in 10,000 years or it's going to happen 1 in 5 years, I don't know how to price it. And in the same way that when you look at a corporate investment that something like Moody's would put a rating to, Moody's is your arbitrator of the risk. They're looking at the financials and the repayment stream, the risk to the system, and the likelihood of default. Our likelihood of default is based on the either experience analysis or stochastic modeling that's used off of all of this data, and that's our arbitrator of our likelihood of default. As that evolves, it opens up new opportunities for folks to come in. So I think maybe the insurance and the reinsurance space, the catastrophe bond space, maybe we don't do enough promotion in order for this audience to feel it's providing more than 0% impact.
Thank you. Thanks very much. Yes, I'll bring you in there, Merli. Yes.
Okay. Yes, I would also just say from the MIGA side of insurance, which is political risk insurance and credit enhancement, I think it is very clear that these types of insurance instruments can play a critical role in mobilizing private finance to support climate-related solutions and financing around the globe. So what we're seeing at MIGA is that there's a lot of finance around for climate. So I think in that survey, for instance, green bonds were one of the key financing instruments for climate. What we see as more of a binding constraint at the moment is the capital that commercial banks have on their balance sheets and how they can deploy that capital to support climate projects. So what we're seeing some very innovative transactions in the market where insurers are taking risk off commercial banks' balance sheets, and the banks are then obliged to use the space that's opened up by that credit or guarantee to use for climate finance projects. So there's a de-risking that's going on, and then the space that's opened up is obliged to be used for climate finance transactions. And MIGA has been experimenting with these types of instruments itself, working with commercial banks for a number of years to see how it can use its instruments to open up space on commercial bank balance sheets to de-risk those balance sheets and then deploy the capital that's now remaining on the balance sheet or that is now opened up or freed up to use that space for climate finance. So right now we're in the middle of structuring a transaction, which would be our first in this climate finance space, whereby a MIGA guarantee would de-risk a commercial bank's balance sheet and allow that open space or oblige that space that's opened up to be used for climate finance. So we think this could be a very effective tool for further enhancing commercial banks' proclivity to support climate finance projects.
Okay. Thank you very much. Thank you for that. And yes, Matthias, you'd like to come in
there was a relatively high percentage for green bonds that would help to finance the change. I think green bonds are important, but I think they are not the solution because volumes are still relatively low. We expect this year issuance volumes of green bonds of $250 billion. That's double the size that we have seen last year, but still very small relative to what is believed needs to be invested in order to change to a low carbon economy. And therefore also the usual debt capital markets would probably be needed in order to help financing this transition. And this transition probably can only be financed if there are projects that are considered to be profitable for companies in the private sector. And this probably also requires a long-term framework coming from, from politicians that are being set in stone, that leave a sufficient time to transition to get to where we want to, that enables companies in the private sector to actually adjust accordingly and basically also have these investments to make them profitable. Otherwise, I think this is going to be a difficult undertaking.
Thank you. And we've also got, let me just bring in something from our audience here, as you can all see up here. We've got a question on should policymakers force financial institutions to make climate factors a key requirement for all investments? Marie-Laure, you're here from the undiluted private sector here. Would you like to be forced to take these risks into account?
I must say, I didn't hear which question, so I'm a bit lost right now.
It's policymakers. Should they be forced? Should policymakers force financial institutions to make climate factors a key,
forcing
a key decision factor in all investments?
Should we be forced or should we be incentivized? And what is the right level of push between forcing and incentivizing the private sector? I work and I live in a democracy. I tend to think that forcing will not get us very far. Clearly, it was very interesting to see that in the replies to the question, the role of the public sector was seen as very important because I think they have a leadership role probably to incentivize and to pave the way, but that the private sector should clearly follow. What is also interesting is that at the other end of the spectrum, the demand from the general public, the likes of us everywhere in the world, is that, or at least in the developed world, is that we want greener products, we want organic food, and this is also a driver. And if you take, and someone was mentioning this morning the importance of the social aspects of the environmental financing and of the climate financing. So I think if everybody goes in the same direction, there should be a snowball effect that we're already seeing in the green bonds. And hopefully we'll see more innovative financing and more new business models that will be targeted at climate efficiency that will find some financing. But clearly for that financing, we will also need the multilateral agencies, the politics, the tax incentives as all being very important. I think, you know, we're all in the right direction, but forcing doesn't sound to me like the most democratic tool to get there, especially on something that is concerning us as human beings.
Okay. Thank you for that. And Hans-Peter from the IFC, do you think more could be done to encourage the policymakers to encourage private sector organizations to take these risks into account and to disclose them?
Yeah, well, I think a lot of what we're going to see happening is going to be because private sector, because banks begin to understand the risks related to climate change, and they also begin to find the opportunities related to that. And so whether there's a need for enforcement, it may well be in particular circumstances, but generally speaking, that is, in my view, going to be the most important driver over time, and we begin to see this happening. Mm-hmm. IFC helped to develop what's called the Equator Principles. That was about ESG standards for banks to apply in their financing. This was a voluntary code. That voluntary code has now been adopted by banks that represent the majority of investors of financing in emerging markets. So that has power and force in its own right. You set a code, you set a standard. We have the TCFD from the Financial Stability Board, yeah. The task force guidelines on financial disclosure, which came out last year. I would expect those, and then the work that we should all do in socializing, in ensuring that banks understand that, and especially banks in developing countries and emerging markets that may be a bit more distant, that they understand that and begin to apply that in their work. I can see that this will evolve into a standard of that sort as well. Yeah. So that would be, for me, probably the key driver over time of the financial sector taking these, both the opportunities and the risks very, very much into account. IFC certainly works in that sphere. We are helping to run something called the Sustainable Banking Network, which groups regulators and banking associations from something over 30 countries now, representing about 85% of emerging market and developing country banking capacity. And that is a forum which discusses exactly these things. And it's relatively new, and it's very, very active. And I would expect these kind of initiatives to come out of these associations.
That's a very important point, and I'd like to bring Matthias in again on this, because we do see a profusion. We've just heard about some of the different initiatives out there. We do see quite a profusion of different initiatives, different voluntary schemes, different guidelines and so on climate risks, climate disclosure and climate investment in general. Are there too many? Is it confusing for investors? Would it be possible to streamline some of these different initiatives? And how can we help investors to have more of a defined investment in these instruments? Can we provide more definition to the market, in other words?
Yeah, I mean, if you're referring to green bonds, apparently there is no official guidelines as to how a green bond needs to look like in terms of documentation. So basically you can relatively easily issue a bond and call it green. without having a lot of scrutiny on what you're putting into the documentation. And this is, I think, something that makes it very difficult for investors that want to focus on these kind of investments to make the right decision. And therefore, and I think this is something that the EU Commission actually has put out as well, they want to look into a so-called taxonomy for green bonds in order to align basically the documentation as to what it means to issue a green bond and to make it easier for investors to make the right decision in that respect. As I said, at the moment, there's limited guidelines as to how the documentation needs to look like. There's also limited guidelines as to, after the bond has been issued, whether there's governance in place at the level of the issuer that makes sure that the proceeds of this bond are really invested in a green project that is described perhaps in the bond documentation. And these are things that probably are still missing. And we have put together this green bond assessment in order to make it easier at this point in time for investors to make this judgment. But I think it would be much easier if there would be some kind of unified guideline that people can use and judge.
Yeah, okay. Thank you for that. We've got comments and questions coming in from the audience here, as you can see. I'm going to ask for another Buzzmaster question at this point.
Okay.
When we're asking these questions, it's not an exam question. We want you to just go with your gut.
Yeah, go with your gut. And the question is, what guidelines are most useful to institutions considering climate-friendly / green investments? Is that UNEP Principles for Responsible Investment, the Task Force on Climate-Related Financial Disclosures, RED+, or other? And if other, then I might run to you with a microphone. Or fan. You just want to get me out of my chair, don't you? Yeah. Okay. Well, there you have it. I think that's pretty convincing, right? The Task Force on Climate-Related Financial Disclosures is a clear winner, I'd say.
There we go. That's a strong vote of confidence there in the Task Force on Climate-Related Financial Disclosures. So I'm sure if we've anyone in the room who's looking at that will be pleased. I'm perhaps a little bit surprised that some of the others haven't got more supporters, but there we go. Let's take another Buzzmaster question while we're here. Thank you.
Yeah. The focus of investment should be on existing tried and tested low-carbon tech, such as renewable tech, developing innovative tech, such as hydrogen or carbon capture, adaptation / resilience to the effects of climate change, or it's too late, we must focus on geoengineering and blast a solar shield just outside the stratosphere, for example.
Okay. And again, we're seeing some changes in the numbers there, but I think there's a clear majority that want us to look at adaptation to climate change and helping to build resilience to the effects of climate change. And as we know, some of the effects of climate change are effectively already locked in to the climate system, even if we cut emissions drastically now. My fear is that we really haven't been doing enough on adaptation and resilience. We've focused, quite rightly, we've focused on mitigating emissions, but have we left out adaptation and resilience? Merli, would you say that we have given enough attention to that? Would you say, sorry, Merli, I'm directing this at you. Would you say that adaptation and resilience are taking up the investment that they ought to be getting?
Well, I think that's a great question, and I think it's a great area where there is a need to do more, and for, I think, the multilateral development community in particular to scale up its impact in that area. I think there's been a period of great ferment and innovation in the renewable sector, and so there's naturally been a focus on trying to capture that energy and the technological changes that have really been driving change in that sector, and that has also driven private sector interest into that sector. And so we've seen a period strong investment, including in very difficult markets. The World Bank Group, for instance, has done provided a lot of support, for instance, to the Egypt solar sector, where now Egypt is a leader in this particular area, but there are other other countries across the globe where the World Bank Group has had a major impact there. I think we recognize that there's more to do in the resilience and mitigation area, and that we are now increasingly turning our attention to ensure that we can also scale up as strongly in that area as we have in the renewable space, while continuing to do important work in renewables as well. So of course these things go hand in hand. I think this is a complex issue, I think, as you've noted yourself, and there's a range of solutions across a range of areas where there can be a contribution, including from the multilateral development community. So I think that we need to scale up across all of the areas, but including where perhaps there's been less energy in terms of dynamism from the private sector in particular.
Yeah, thank you for that. And I'd like to turn to Marie-Laure now, because when we're looking at this again from a purely private sector point of view, one can see the attraction perhaps of something like renewable energy, which is already yielding great returns. Perhaps the attractions for private sector investors, perhaps the attractions of investing in adaptation and resilience are less obvious. What would you say?
What I'd like to say on that is that renewable energy is a bit like green bond now. It's easy. And I find the reply from the audience very interesting, because we see some clients sometimes in some sectors that are clearly not labeled green. The oil and gas, the mining industry, which are extracting industries, they are not labeled green at all. And some of these clients have terrific projects of getting electricity to communities where they operate. The oil and gas industry is also trying to stop gas flaring, and the World Bank is supporting a very important initiative in that sense. But for the clients, it's difficult to find the sources of financing, because even from the multilaterals sometimes they get the answer, oh gosh, this is dirty, as an industry. And clearly there is some progress to be made. There is some margin for improvement there. For us banks, we also are constrained now by our own oil and gas policies and sectorial policies. And then if we look at investors on the other side, sometimes they want something easy with a taxonomy for the green bonds that ticks all the boxes. And if we start looking at improving the mining industry, and we still need a lot of things coming from the ground, so we still need extracting. It will be more difficult in these areas, and even for the clients not to be too shy to get these projects to the market. And they have fantastic ideas, but they're tainted just because of the sectors they operate in. And we're trying also to help them in that sense. But it's easier nowadays for the renewable developers to find finance for anything than for still areas where there is a lot of margin of improvement to get there. And clearly gas flaring is an example, and the mining industry as well.
Great. Thank you. And I'd like to bring in the IFC at this point on adaptation and resilience and its importance. And actually also, could you give us an example of how public backing has unlocked private sector investment in this area, in your view?
Sure. I think, one general thing about adaptation, as we hear, is it's been a bit harder to find the investment opportunity there. But I think as we understand better the implications of climate change, we're going to see more of that, for instance, in cities, everything around water, climate-smart agriculture. So IFC as well has been focusing initially very much on renewables, then certain other mitigation sectors have come in, and adaptation is still only a small share of our business, but it's a growing share. In climate-smart agriculture, you have one area that is now growing very fast for IFC. We did about $1 billion worth of financing last year in this area, in which you can help to find more water-efficient solutions, for instance, in the Sahel, which is an example of a very nice complementarity between work that the World Bank and other public agents are doing on irrigation in the Sahel, and work that IFC has been doing on warehousing and other approaches to increasing the pre- and post-harvest efficiency of agriculture there. So there is this, and around water generally, I would see many opportunities emerging in the future. But cities as well, this is a priority that we are now giving ourselves. We have a cities initiative in Latin America and Eastern Europe and Central Asia, which we would like to roll out in other parts of the world, working with cities on their water utilities, obviously, but also on buildings, and resilience in buildings is a very large area, and a very under-financed area today, partly because municipalities do not tend to have the kind of credit quality that markets and banks would require. But that is where we, IFC, the World Bank, and other players can make a difference to help cities become more financially self-standing and sustainable. You're asking for other examples of public-private...
Those are good examples, actually. Yeah, and actually bringing in this whole issue of water, which obviously is intimately related to climate, but which some people might not always associate as being a climate-related issue, is really important. In fact, sometimes it may even be easier to talk about water to people than talk about climate. Just on this question of adaptation and resilience, Cory, because obviously that should, on the face of it, be of prime importance to insurance products.
Sure, I think that's a theme that's building in the insurance and the reinsurance markets. You've seen some articles in the press. The Rockefeller Foundation in the US has been particularly promoting initiatives of trying to create resilience. I think there was a recent article about the Nature Fund also wanting to promote kind of resilience against erosion and beach communities. And so it's been interesting to see the pairings as they're starting to come up of using financing and reflecting in the cost of the financing, the increased resilience coupled with the insurance and the reinsurance market pairing the risk transfer aspects that they can provide as well, which is can they provide the capital after event that would allow you to then mitigate that aspect. So it's been interesting to see some of these resilience efforts growing and building within the market. I would still say it's still in its more infancy from a private sector perspective, but definitely interest, I would say robust interest from the constituents that I've heard.
Yeah, brilliant. Thank you very much. Thank you. And as you can see, we've got some great questions there. I'm going to put the next one to our panelists as well. Do you think that the EU plan for sustainable finance has gone far enough in terms of tailoring financial regulation to climate change? We've also got questions about the main financial instruments, and we've got some people are very interested here in forestry and agriculture. I think a little bit of that has been addressed. I'm going to put those questions to our panelists in a minute because we are going to have to start wrapping up shortly. I'm just going to take the final Buzzmaster questions, and then I'm going to put that to my panelists very, very, very quickly as a package. Please.
Here we go. The question is, how would you rate progress in the last 10 years on climate or green investment? it's about right. Too slow, too fast. Progress. What progress? We're going backwards.
Okay, I think it's pretty clear there that we're going too slowly for most people. Though I'd be interested in knowing who are the 5% who think that we're going too fast.
Wait, let me block them first before they remove their answer. And you think anonymity exists, but it doesn't. So here you go. PKM, where are you? Your phone is blinking. Yeah. There's no running from the Buzzmaster. Where are you? Hands up. Your phone is blinking. Look around, see your neighbor. Who is it? And then you can answer why you think we're moving too fast. No backbone. It's okay. I understand. I would be shy too. All right, should we go to the last question then?
Thank you very much. We'll get on to the...
Yeah,
You've got one more for us.
I think we have one more, and that is this.
That will make for an interesting discussion over lunch, which is coming up next. But here we go, final question.
Final question. What investments should be avoided? No new investment in fossil fuels, no new investment in coal, but gas is okay. Changes to land use, for example, new plantations, or all investments allowed if they can prove carbon saving.
There we go. We've got quite a few people, more than a third, who don't want to see any new investment in fossil fuels. But mostly people are saying that really we should be open-minded about investments, but they should have to prove a carbon saving. I'm just going to give a final, very, very brief word to our panelists, because I know you're all looking forward to networking over an excellent lunch in a moment. Matthias, I'm going to take you first, because we did have a question there about whether the EU rules are good enough for investors. Could you address that for us, and then we'll move down the panel?
Can you say again, please?
Whether we had a question. Here we go. Right. Do you think the EU action plan for sustainable finance has gone far enough in terms of tailoring financial regulation to climate change? Is the EU? Let me rephrase that. Is the EU doing enough to reassure investors, encourage investors to come forward? Should the EU be doing more?
I think this is a great document, to be honest, and it addresses all parts of the investment community, and we need this kind of initiative in order to move forward. There might be, but again, this is only a paper so far. Nothing has been decided, and it's great that they are asking all the participants in the financial markets to provide them also with feedback, and I think this can lead to quite a nice kind of regulation that should help us moving into a low carbon economy. But again, it requires to be a level playing field for everyone, and it requires to be a framework that is credible and that is long-term and that people can actually believe in order to make the necessary adjustments and investments. Because these are all long-term investments, and if this is being put in place and 2 years later someone thinks it's not correct and changes it, that doesn't help the trajectory overall.
Okay, thank you very much for that, Marie-Laure. We just had quite a substantial minority there of people who think there should be no new investments in fossil fuels. Would you back that?
Well, I think my previous answer to the other question was probably no. I think we can still invest in oil and gas and fossil fuel, provided we do it properly. Unfortunately, our economies still need a lot of fossil fuels. Unless it's proven that we don't need them, I think we should still invest in them. What was interesting in the same question was also the very high number of people thinking that provided that it's proven that it's not damaging to the environment, it's okay. And I think that's where we want to go. That's where positive impact wants to go, by taking into account sometimes also the social positive effects or the governance positive effects, so that it can counterbalance the fact that we might be working in industries that are not so sexy to start with. But if we take it all in, we might have a positive effect, not only for the planet itself, but to humanity.
Okay. Thank you very much. Merli, are you encouraged?
Well, yes, I think I would just like to say that having been at the World Bank Group for over a decade, I'm so encouraged by the amount of work the World Bank Group is doing, along with its partners, its own shareholders who are governments, as well as other MDBs, working to mobilize the private sector as well as the public sector. You know, when I look out in the room here, I see some World Bank Group professionals who have done enormously innovative transactions in the capital market space. We ourselves are expanding our teams to engage in climate finance transactions and to work more closely with colleagues at IFC and the World Bank to scale up. We have very ambitious targets. Those targets are now being all met much earlier than we expected. And in fact, we are looking now to settle on even more ambitious targets going forward. So it's, you know, in answer to this question, you know, has there been enough done? There clearly hasn't been enough done, but there is an enormous amount being done. And I think perhaps the world community has perhaps come a bit late to the climate issue, but I think now everyone is focused on this like a laser beam. And I'm optimistic that we're going to continue to make a lot of progress and that we'll see a lot of these frameworks come to fruition and really deliver benefits.
Thank you. I'm sure we all hope that. And Cory, just the strongest message you'd like people to take away from your sector, very briefly. I'm conscious people want their lunch.
I'm sorry, what was that?
The strongest message you'd like people to take away from your sector?
Yeah, I think it's really the innovation that's been coming through, and it's been encouraging working with specifically the World Bank. I think they've been on the front end of seeing really unique topics and trying to tackle them in a partnership with capital markets, insurance, and reinsurers. And that's been very exciting, and I think their efforts actually spawn others to think more creatively around that. So the pandemic initiative that they did last year, I think, is particularly interesting, and we're now all actively monitoring pandemics much more closely. But I think it helps the private market start to think about these risks that they're warehousing, whether the regulators are forcing them to hold capital against that risk or not, but to know that as markets develop, there are options for mitigating the volatility. And so I'm encouraged to see where my space will be. You know, it's been around for 20 to 25 years. I'd like to see where it is in another 20 to 25 years, albeit I'll probably be on the sidelines by that point.
Thank you very much. And finally, the IFC, do you have a final word for us?
Well, I think the key is to recognize climate finance as a huge opportunity. Get away from the notion that this is just about risk and that this is a catastrophe. We have to convert it into an opportunity. I heard Tim Jarvis say this morning. I thought that was totally right. So, and it is an opportunity. At IFC, we did a study in 2016 to looking at 20-something countries and their INDCs, what those would convert to in terms of business opportunities. And that alone represented, in our judgment, some $23 trillion of business between now and 2030. That is quite, and that covers a whole range of areas. Now we've touched on various. You can look across the whole panoply. Climate affects all sectors. It affects so many different instruments. So it is a huge opportunity. In many cases, we have to unblock that opportunity, and that is where the interplay between public and private sectors come in, the efforts to de-risk. And we're making progress in those areas, but clearly, as many have recognized, it is still far too slow.
Yes, we are far too slow, but that's an excellent point you make about the business opportunities. And in fact, I do believe if you keep your eye out on the Guardian website later on this evening, you will see some very interesting news coming out on that. Just a little preview for you. Femi, I've been keeping you waiting, and I've been keeping our audience waiting for their lunch. come up and send us off to our lunch. And just before
Thank
we do
you
that,
very much,
could you-
Fiona, Harvey. Thank you, panel. Great job. Wow.
Could I say thank you to our excellent panelists as well,
Yeah, of
actually, and
course.
thanks to you.
Can't thank you enough. 2 thank yous are great. Wonderful.